The COVID-19 virus has disrupted the once thriving American economy and reduced it to rubbish, as the English would say. Bullocks! With so much pulling the economy down, it's hard to know how the stock market will be in the future. Here's what I know and what I think will happen. We already know about the recent spread of coronavirus throughout the US, particularly in New York City. This has led to countless deaths and, the economy. Two adverse shocks have happened. First, restrictions have caused supply to fall off the deep end. The greatest cause is lack of face-to-face communication to sell products to consumers, such as real estate. With social distancing, this essential component of making sales has been reduced by billions of dollars. Second, on the opposite end of the spectrum, demand has plummeted. This lull in demand is caused in large part to the massive amounts of workers who've been laid off. And when workers are laid off, it reduces the amount of money pumping through the American economy. In other words, Americans have less money to spend, which causes a drop in corporate earnings, which leads to job cuts, and I think you get the idea. It's not good. This downward spiral of economic growth and activity is an inescapable result of the COVID-19 pandemic. And unfortunately, there is no clear end in sight. Well, basically, everyone has been affected by this crash. Families, small businesses, large corporations, no one's been spared. And all these groups play an essential role in the American economy and help keep it going. This should be no surprise, as Microsoft co-founder Bill Gates infamously delivered a TED Talk explaining about the dangers of a virus such as this back in 2015.
We've actually invested very little in a system to stop an epidemic. We're not ready for the next epidemic.
With the recent $2 trillion stimulus bill signed, the government is doing what it can to help the American people get through this. As a result of this, the government's going to suffer a dramatic financial loss, which could lead us as the American people to suffer in the long run. But we'll leave out the part about inflation because they are doing what they can. Currently, the stock market is trying to recover from its recent plunge. Many investors were spooked and sold all their stocks, which led to greater turmoil. While trading is still highly volatile, we have passed a decent amount of time without a trading curb. Last month, it seemed like we were hitting a limit down trading curb almost every other day. That being said, financial leaders such as Jamie Dimon, CEO of JP Morgan, one of the largest American banks, have predicted that the worst is yet to come and we're in for a very bad recession. Many investors debate whether the return of the bull market will take a couple of months or a couple of years. One thing is for sure, there will be no shortage of Tesla short sellers. Remember, I am not a financial advisor. These are just my own humble 2020 market predictions. 1, the federal government will cut interest rates again. 2, trade disputes will be put on hold for now, but will resume as economies recover. 3, the economy and the stock market will affect the 2020 presidential election. 4, Apple will become the first $2 trillion market cap company upon the release of 5G iPhones. 5, Tesla will continue to be heavily shorted by Elon Musk haters. 6, the Dow Jones Industrial will decline by 20% or more. Lucky number 7 is not lucky for gold. Normally when stocks go down, gold goes up, and it hasn't really done that this time. And I don't think it will, because there's too much money to be made in the stock market. We don't know how quickly we're going to recover, and no one wants to be stuck in gold when stocks surge 20%. The largest driver of downward pressure isn't just the loss in revenue right now. It's the uncertainty, because it's difficult to plan one way or another when you don't know when business will be able to resume. Just about the only thing that is for certain is that my next video will be about the coronavirus effects on the housing market. So make sure you're subscribed so you don't miss out on that.